Alright, yes guys, welcome to the trade recap of the trades I've taken over the past couple days. I've made myself over $100,000. Now how have I done it and why have I taken these trades? Let's get into it. A lot of you guys have been requesting in the live streams of me putting music over it, saying why you're not speaking and why you're not kind of breaking down the trade. Well, the live streams have been for family and friends to copy my own trades, and the trade recap is obviously for the recap so we can break this down. So let's get straight into it. Now this is a trade that I took yesterday on the 12th and it's currently the 13th, which I took a trade today, which was an absolute lovely short. Now both of them are both shorts. So on the 15-minute time frame, you can see here we want to mark out the key levels for this session. Now it's going to be obvious 15-minute highs, and if we have a set of London, Asia, previous day low, etc. So price is currently trading on Tuesday, and we can see that we have a Monday low, which is very obvious. So this is going to be previous day low. And then above previous day low at 1:30 a.m. Asia runs between 8 p.m. and 2 a.m. This is going to be Asia lows. And then we have a point of sell side here, which is just an obvious point of sell side. It's nothing to do with time-based lows. It's not London, it's not Asia, etc. It's just a low for price. So this is going to be a point of sell side liquidity that we can mark out. And this is just a point of buy side. So London, Asia, doesn't matter what you call it. It's all buy side and sell side. It doesn't matter whatever you label it as. However, time-based highs and lows are more high probability to mark out and for price to draw to or sweep, and then obviously draw to the opposing liquidity. So it is good to mark that out. And then whatever you mark out in NQ, just make sure to mark this out on ES as well, so we can copy, previous day low over onto ES as well. So there's our point of sell side, and as you can see here on ES, our point of Asia lows has already been taken. So we know there's a bullish SMT on NQ at Asia lows already. So now let's dive into the lower time frame and monitor price inside of this macro and see what we are currently looking at. So the first day of macro is resting between 9:45 a.m. and 10:15. So one thing I also want you to bear in mind, a lot of people were asking on this specific session, where was the sweep of liquidity? However, price has already swept liquidity, which is very clearly obvious to the left, and it's going to be previous day high. So we've already swept previous day high already prior to the New York Open, and now price since the New York Open has basically just gone up and not really too much has happened. So it's basically just gone sideways a little bit. So let's wait towards the first day of macro. We've already swept previous day high. If you look on the 4-hour time frame, you can see that we are trading out of a 4-hour bearish fair value gap as of now. So the draw on the 4-hour time frame is going to be lower, and we've swept previous day high. Then if you look on the hourly time frame, yes, this hourly bearish gap got inversed, therefore the draw is going to be bullish towards the high, which was previous day high. We swept previous day high, therefore the hourly draw is going to be neutral as of now, because we're not in a bullish gap and we're not in a bearish gap on that time frame. Now on the 15-minute time frame, we are in a 15-minute bearish gap and also a 15-minute bullish gap. Therefore, the bias is neutral on the 15-minute time frame. And then on the daily, we're absolutely in nothing. So the daily is going to be neutral there as well. Okay, so our overall bias currently is bearish. Let's fast forward price. We've had a sweep of buy side. Let's see if we get displacement lower. Okay, so our overall displacement is going to be below this previous short-term low, which you can see here for price. So that is our market structure shift. Now, the reason why I actually caught a late entry on this trade, I'll be honest. I was on a call with a real estate company in Dubai as I'm purchasing one of my first apartments over there. Currently own 2 apartments in Miami, and I'm looking to purchase over in Dubai because they have very good appreciation each year on the apartments, and also very good rental yield and overall growth of the economy over there compared to other countries and other places. Yes, there is good places to buy, but Dubai is the best. And as far as growth, I do see it to be one of the fastest growing cities around. Now, I missed this entry right here. I missed it because I was on a call with the real estate company, and when I seen this displacement and I missed the first entry, I had to put them on hold. I said, look, wait up, I need to take this trade real quick because potentially I might be able to buy another apartment with you guys if I can take this trade. So I missed this entry here. Price then actually displaced lower again, which you can see. So we've seen a further displacement for price. And then for ES, you can see that price actually displaced further again. again, leaving behind this bearish fair value gap. Now bear in mind, we still have a draw for Asia lows and sell side and also previous day low. So I was looking for price to retrace back into this fair value gap. Now the other word for this fair value gap is also BAG, breakaway fair value gap. So you may see some gaps on my chart labeled as bag, and you're probably not really understanding what that means. Well, a breakaway gap is that you can run your stop placement at the high of a breakaway gap, as the candle that causes a displacement and also creates a gap is called a breakaway gap. For a breakaway gap, I would just run my stop placement at the high of the breakaway gap, which you can see here. So that's going to be around a 32 handle stop. So that's basically my max stop placement, and I may take it with, say, one less micro or one less contract depending on which account I'm placing the trade on, and then I just target the first 1 minute low that gives me a 2-to-1. So it's going to be this 1 minute low here. I'm not looking to target Asia or this point of sell side, which is actually equal lows, which you can see here, relative equal lows, or previous day low. I'm targeting the first 1 minute low for price that is presented. So let's see if we get an entry for price. Okay, perfect. So price trades up into that bearish gap, and you can see that I've got a fill and an entry for price. We also have a bearish order block resting above the gap, which ES then actually trades into and taps, and then ES also trades back up into that bearish gap there. So I've caught a fill for price on a continuation model after missing the first entry, and then as price draws lower, I'm then going to be trading my stops once we take out the first short-term low. Okay, perfect. So price then draws in favor of the trade, takes out that first short-term low. Now we go break even on the trade if price is already over 50% of the trade. So if we take a short-term low over 50% on the trade, we're going to be break even. If we don't, and we just take a short-term low, very close proximity to break even, then we go to the short-term high. But because we took a low past 50%, we're going to be now at break even on that trade. And there you have it. Price smashed TP on that day, 12th August, first day of macro. Let's dive into the next breakdown. Okay, so getting into the price action from today, which is probably many of you guys question about the trade that we did take today. Now, points of buy side that we did sweep. You can see here, 4:30 a.m. Everyone knows that to be London highs. So we've swept London highs already, which you can see prior to the New York Open. We've also swept countless highs to the left, and also swept previous day high, which was created for Tuesday. Now, we've swept previous day high, countless other points of buy side, and we've also swept London highs, which is perfect. Now, if we look at price on the lower time frame, and as we approach into the midway part of this macro, which obviously ends at 10:15, so at 10:15 a.m. that's going to be the end point of this first day of macro. Let's see what we get. So we've already swept this point of buy side, and our overall bias as of now actually leans towards relatively neutral. So we don't really have an overall bias as of now, which was the main concern for a lot of you guys. And let's see if we do get a displacement lower as of now. Okay, perfect. So we've just seen a huge shift in market structure. Now, the mistake that a few people made is that they took this trade and went short. Now, yes, it played out. However, you do need to weigh up your probabilities and weigh up your scenarios. So NQ has displaced lower, and we have a bearish breaker block paired with the fair value gap. So it does appear that you do have absolutely everything. Now, another thing that you do have as a confluence for this trade is a bearish SMT. So this trade would be B+ because there's no displacement on ES. The reason why I didn't take this is because the bias as of this point was completely neutral, and yes, the trade was already B+, but I didn't want to risk a neutral bias with a B+ no displacement on ES. So I said, look, I'm going to wait, and if price does displace on both NQ and ES, then I will take the short to then obviously target areas of London lows and have Asia lows, etc. as the draw for this trade. Okay, so the confluences are definitely stacking up for taking shorts here, but there's no displacement on ES, so I sat out and didn't take any trades here. Okay, perfect. So now what we can see for price is a further displacement lower below that previous short-term low, and then now look at ES. ES is displaced below that short-term low there. This leaves us with a mitigation block. Because price didn't take a short-term high, we're going to have a mitigation block paired with this fair value gap here, which you can see. Now what you will see is that ES does actually tap into this gap before NQ. I was not satisfied with the entry and the stop placement, so I didn't take it, and I waited for an entry specifically on NQ in order to take this trade. So we do have a draw for London lows, sell side and other points of sell side, previous day low, etc. So with the bearish SMT, a displacement, a mitigation block, displacement on both, this trade made a lot of sense. So now let's fast forward price and see if we get entry on NQ. So you can see there ES tapped the gap at 10.03. I was not satisfied with this entry and stop placement, so I waited for an actual solid entry on NQ, which it gave it to me at 10.06. So my entry was filled and I took a short at 10.06 off the gap. I ran a stop placement at relatively the high of this red candle here, so a 20 handle stop, and I ran my TP at the first 1 minute low that gave me a 2-to-1 risk to reward. So you can indeed see a lot of 1 minute lows that we can target, and I want to look for the first 1 minute low that gives me around a 2-to-1 risk to reward. So I'm satisfied with this 1 minute low here. Yes, it's just a random 1 minute low. Now I target the first 1 minute low or high in a long or short position, the first one that gives me the closest to a 2-to-1 risk to reward. So I was looking for this low and I marked it just as a point, obviously minus sell side, and that's the point that I'm looking to target. So I have my entry for price, I have my stop placement at 20 handles and my TP at 46.75 handles. So let's fast forward price. Okay, so as you can see here, price is now traded over 50%. So from break even towards TP, we are now taking out a short-term low over 50%. So that's now going to mean that our stop placement is at break even. So when price originally took out this low, I trailed my stops to this short-term high. And then when we took this low, which is over 50%, my stops are now at break even. So it's completely risk-free. Now this fair value gap here is labeled as what? This is going to be a breakaway fair value gap. So what that means is that with this candle closure, we can now put our stop placement at the high of the breakaway gap. So we're trailing our stops only into a small profit, but that's where my stops are now going to be. I'm trailing my stops to the high of this breakaway gap candle, and I expect this to get respected along with this bearish breaker paired with it as well. So let's fast forward price. Price trades back into the breakaway gap. And yes, the breakaway gap does get inverse and it does get disrespected. However, our stops do not get hit, and then price takes out the next low. So what we can do here, I trail my stops more aggressively, and this is another breakaway gap. So price displaces below the low and creates a gap. So I trail my stops to the high of this breakaway gap, expecting price now to accelerate towards the overall TP. And I always run my TP 2 to 3 points above the point I'm looking to target. So I'm targeting 963. So I had my TP around 966, about 2 to 3 handles above the point that I'm looking to target. And then boom, TP was absolutely obliterated and destroyed. And I made $34,000 on this trade here specifically. Now, if you are finding these overall trade breakdowns very, very useful, then obviously drop a like on this video because we need to send this channel out to more people. Subscribe to the channel if it is the first time you actually heard my voice, which is pretty crazy. And drop a comment on this video for any recommendations or any topics that you guys are struggling with. I have seen a very good comment earlier. Someone said about make a video on trading stops and how to manage that correctly. I can definitely do that for you guys. Any other suggestions or recommendations for future videos, just let me know. Apart from that, guys, have a great rest of your evening and I'll speak to you guys in the morning.